Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Welcome to Capital Securities. Good evening. Today is Tuesday, September 30th. I'm analyst Jiang Jida. Please like, subscribe, and share. For investment questions, leave a comment. If I can't answer today, I'll explain in tomorrow's class. This week marks the first day of the long holiday post-Teachers' Day. Yesterday, our stock market was closed, but the US market was open, so we did an audio live broadcast for Capital Securities. Good evening, reminding everyone that starting tomorrow, October includes the Mid-Autumn Festival, National Day, and October 25th, Retrocession Day. In total, Taiwan has 3 national holidays in October. However, on these 3 days, the US stock market remains open. So, while we have national holidays here, since the US market continues to trade, our website and program will provide services. Let's look at today's investment highlights. Good evening, Shi, Sherwan, Huiwan, and Flying Fish. Flying Fish mentioned the US stock market has no holiday, so they didn't attend class. You can always listen to the replay. Good evening, Ming, Ainaya, Alice Fu, and Share. Let's look at today's investment highlights. Investment bank strategies show divergence. As for the movies and non-farm payrolls, will we not be able to see them? What does this mean? As the US stock market hits new highs, investment banks show differing stances, some bullish, some bearish. Some see the S&P wink with tongue sticking out 500 reaching 6,800 or even above 7,000 by year-end. Others, more cautious, offer negative outlooks. How should we interpret these bullish and bearish viewpoints today? I'll also share additional thoughts and positions from these banks. Regarding movies and non-farm payrolls, what does it mean that we might not be able to see movies? Today, Trump announced new tariff war strategies, including a 100% tariff on non-US made movies. What impact will this have on the film industry? Also, why might we not be able to see the non-farm payroll data this Friday? Because tomorrow, October 1st, some budget bills are set to expire. The US government's budget spending will need to be either postponed or executed, but right now, both the House and the Senate, regardless of whether it's the Republicans or the Democrats, are facing issues. Their disagreements over the budget, whether it's medical subsidies or spending cuts, often lead to divisions. This could result in the budget bill not passing tomorrow, October 1st, causing a US government shutdown. The most immediate and significant impact would likely be on the non-farm payroll numbers released by the US Department of Labor's Bureau of Labor Statistics this Friday. Whether or not the non-farm payroll data is affected, I'll analyze the related impacts in a moment. On the industry side, there's another concern right now. What are people worried about? They're worried about what U.S. Secretary of Commerce Gina Raimondo said regarding the 50-50 production rule for the semiconductor industry. Will this 50-50 production requirement impact the revenues of companies like TSMC or the broader semiconductor sector, including Intel, TSMC, Nvidia, or Apple? What exactly does 50-50 mean? Actually, we briefly explained this on our show yesterday. Simply put, the so-called 50-50 production rule means that for every amount of wafer production you have in the US, you must match that with the same amount of wafer imports from other countries. In other words, however many wafers you import, you must produce an equal amount locally in the US. For example, let's say TSMC exports 20,000 wafers per month to the US. Apple, the requirement would be that TSMC must produce 20,000 wafers locally in the US. Domestic production must match export volume. If numbers don't match, it creates an imbalance, and corrective measures might be taken. This is something U.S. Secretary of Commerce Gina Raimondo has considered recently. Whether this will impact TSMC's future revenue or profits and affect its upcoming earnings call on October 16th is something I'll touch on today as I discuss TSMC's current situation. Regarding stocks, today I'll briefly discuss Old Huang, Jensen Huang. Jensen Huang is very precise when investing in stocks, whether it's his industry investments, company development, or the stock market itself. Recall, in May this year, Jensen Huang mentioned that he planned to sell 6 million shares of stock this year. He has been gradually selling shares throughout June, July, August, and September. According to latest statistics, he is still selling shares. This hit-and-run approach, selling as price rises, raises question, is this right thing to do? Today, we'll talk with everyone about Huang's approach. Jensen Huang's trading strategies. Good evening, everyone. Good evening to Louis Yang and Yin Meidai. Economic data update. A few indicators released tonight. US FHFA House Price Index for July at 9 p.m. Previous and expected values negative 0.2%. This data relates to real estate, but its impact on the US stock market or overall economy is low, so we view it neutrally. S&P/Case-Shiller 20 City Home Price Year-over-Year Index for July, released at 9 p.m. Previous value 2.14%, expected value 1.6%. Another important data point tonight is the Chicago Manufacturing Purchasing Managers Index for September, which was at 9.45. The previous reading was 41.5%, while the expected reading was a slight rebound to 43%. In fact, it has been below 50 for the past 2 to 3 years. It has been below 50 for a long time. Generally speaking, a PNI reading above 50 represents a healthy economy. It is more inclined to expand. Below 50 is more inclined to contraction. However, because it is a PNI that is more inclined to manufacturing, the manufacturing industry usually has a relatively low proportion in the US industry. The service industry is more important. We have reminded everyone that the PNI of the service industry is about 60 to 70% of the entire US economic structure. So in fact, when we look at this PNI data, especially in the United States, the service industry is slightly more important than the manufacturing industry. So why is it that in this Chicago PNI? Why are the manufacturing data often below 50, as the market seems to take it lightly when it comes to data on the S&P Global PNI, etc.? This is the reason. However, if it is data related to the service industry, people pay more attention to it, and investors pay more attention to it. However, the Chicago PNI data will be released at 9:45 this evening, which is more biased towards the manufacturing industry. In principle, we look at the expected value for purchasing progress data. If the data released tonight is higher than expected, or even higher than the previous value, then it's higher than expected. The market will generally view it favorably, meaning the economy is at least not heading for a recession. So, remember that the previous value of 41.5 and the expected value of 43 are sufficient. As long as it's higher than the previous value or higher than the expectation, there's no big problem. Also, at 10 p.m., there's a related labor market data called the US JOLTS for August. The previous value for job vacancies was 7.181 million, while the expectation was a slight rebound to 7.185 million. This data is slightly related to the labor market, although there may be rumors in the market today that there's a 70% chance that the US government will shut down tomorrow. First, the conclusion about this government shutdown. Shutdowns, opening and closing, have happened repeatedly in the US past, no matter which president was elected, Republican or Democrat, Obama, Reagan, or even during Trump's first term. All have seen US government shutdowns. So, we generally take a neutral view of shutdowns because opening and closing the government has become common. A shutdown doesn't mean the US government is collapsing, and reopening doesn't necessarily mean the US government is suddenly thriving. That's not the case. Later, I'll explain why a shutdown doesn't necessarily have a huge impact on the US economy or its finances. For example, if Friday's non-farm payroll or unemployment rate can't be released on time because of the shutdown, if they can't be published in time, that's okay. At least. On Wednesday, tomorrow, we still have private sector data, like the ADP employment report, which you can look at. On Thursday, there are also high-frequency weekly numbers, such as initial and continuing jobless claims, which can also be referenced to understand the labor market. Tonight at 10 p.m., there's the JOLTS job openings report, also related to the labor market. So, even though official data might be affected on Friday due to the government shutdown, earlier reports, including today's JOLTS, tomorrow's ADP, and Thursday's jobless claims, can still give us a general sense of overall changes in the U.S. labor market. So, pay attention to the 10 p.m. data. Lastly, at 10 p.m., there's also the September Conference Board Consumer Confidence Index. The previous value was 97.6, and it's expected to dip slightly to 96. This data is fine, just treat it neutrally. So, these are some of the more important data points that could impact the market. Just a reminder and preview for everyone. Now, regarding Fed officials' positions, let me add a bit more. First, there's Musalem. Musalem is a voting member of the FOMC this year. As we've mentioned, the FOMC consists of the chair, vice chair, and a total of 12 voting members. The chair, vice chair, and 5 Fed governors. There are 5 Fed governors, for example. Waller, Bowman, Barr, and so on, these are all included. For example, Williams is the New York Fed president, and he has a permanent voting right. So, if you add it up, chair, vice chair, 5 governors, plus the New York Fed president, that makes 8, right? 12 regional Federal Reserve banks exist, and each year, rotate in as voting members. That's 8 plus 4, totaling 12 committee members with voting rights. This year, since we're near year-end, the 4 rotating regional Fed presidents are Goolsbee, Mester, and Musalem. Musalem is a voting member this year. Now, Gokak refers to Collins, either Collins or Calls, and then there's Zukomis, which is Schmidt or Schmidt. So, pay a bit of attention to these people. Since Musalem and the others are voting members, we need to pay special attention to what Musalem says. He said that he remains relatively open-minded about future rate cuts, and he expects that inflation will stay high for the next 2 to 3 quarters due to the impact of tariffs. So, he believes that inflation will remain elevated for the next 2 to 3 quarters. However, when it comes to the possibility of rate cuts in October or December, he maintains a more open-minded attitude. Another person is Harker. Harker is not a voting member this year, and he tends to be more hawkish. Remember, Harker is more hawkish. What did Harker say? He said that it is still necessary to maintain a tight monetary policy in order to curb inflation. No matter what, whether they have voting rights or not, whether they are doves or hawks, or whatever their stance is, regardless of their position, the fact is that there is still more than a month left until October 30th, until the end of October. There are actually a lot of variables in that month. So, what do we mean by variables? There are many, including how Trump will proceed with the tariff war and the ongoing trade war with China, whether there are any new signs of hope, including follow-up negotiations with the EU, Japan, and South Korea, and even whether there will be further talks with Taiwan, such as tariffs on semiconductors, furniture, automobiles, steel, aluminum, and so on. Any of these variables could change within this month. All of these factors could potentially affect inflation data and might also impact the job market to some extent. These developments will, in turn, influence how Federal Reserve officials view employment and inflation at the end of October. If their outlook is relatively dovish, there might be a chance for another rate cut at the end of October. However, if during this month, Trump continues to act aggressively and take a hardline stance, making some adjustments to tariffs, not monetary policy, but tariff-related adjustments. If he implements more aggressive and tighter tariff controls, then the chances of inflation stirring up in October will be higher. And if inflation starts to rise, the likelihood of the Federal Reserve cutting interest rates will decrease accordingly. Another aspect is that if the job market continues to ease and improve, then the Federal Reserve will also lean toward a more dovish, rate-cutting monetary policy to support the job market. So, Throughout this month, all the economic data, official statements, Trump's stance, how tariffs are handled, and how these factors affect inflation and employment data, there are actually a lot of variables at play. What does it mean that there are many variables? It means some officials, currently dovish or hawkish, might change their stance when it's time to vote in late October. So, this month, we can observe things gradually. For example, today you might see someone like Musraim say he's open-minded about rate cuts. By late October, his view could differ. Or maybe someone hawkish like Hemmick says tightening is necessary, but if economic data underperforms, his hawkish stance might shift, and a rate cut could even be possible. So this is something we'll keep tracking through official statements and keep everyone updated. On the other hand, when it comes to the views of investment banks and institutions, opinions are starting to diverge as the market keeps climbing and hitting new highs. There will be some investment banks that keep getting more bullish as things look better and better, but of course, there will also be some institutions. Some remain pessimistic, others stay optimistic. Many investment banks will raise target prices, raising them. If it hits 6,800 points, when it gets there, they'll call for 7,500 points. When the market drops, if it falls to 6,500 points, bearish investment institutions will appear. They might predict it will drop to 6,000 points. As for these ups and downs, we should view them neutrally, because they're adjusting their target prices according to market trends, raising or lowering them. Of course, there are reasons behind these adjustments. Everyone pays attention to why they're raising or lowering the target price. That's more worth referencing. When Goldman Sachs explains why they're raising their target price, he said the S&P wink with tongue sticking out might reach 6,800 points year-end because corporate earnings are increasing, not wrong. Currently, according to Bloomberg and related forecasts for S&P 500 companies, the predicted year-over-year growth in both profits and revenue is indeed increasing quarter by quarter. So, the increase in corporate earnings is certain. The Federal Reserve became more dovish due to Trump. Global fiscal policies loosened, supporting the stock market. He believes the outlook for global stock markets over the next 3 months is increase holdings, with a year-end target of 6,800 points. Right now, the conditions for these points exist, and these factors are all correct. So, his reasons for being bullish are sufficient. Whether the index will reach 6,800 or even go above 6,800, I think that's not certain, because there are still many variables. But the points he mentioned do exist. Okay, good evening to Gao Ganghuang and Marissa Chen, good evening. Yes, tomorrow is October. Now, since there are bullish views, there are also more conservative or bearish ones. For example, there's PIMCO, the CEO of PIMCO. The CEO of PIMCO. He said the impact of tariffs has not surfaced. He believes the issue of tariffs has not been reflected in the economy, inflation, employment. He said it hasn't emerged, it could. Will drag down the US stock market. He said that in the future, the situation dragging down US stocks is the return rate for US stocks over the next 3 years will only be 6%. The US industrial sector is in a tough spot, and the private equity market is acting tough, increasing risks. Will the return rate for US stocks be only 6% over the next 3 years? That's a pretty big variable. Whether US stocks go up or down depends on how Trump handles the tariff war, how he uses it, whether it's for semiconductors or other industries, or with different countries. How he negotiates or bargains, that depends on Trump's wisdom. Also, don't forget that there are only 3 months left until the end of this year. With 3 months left, the probability of another rate cut is still there. At least one more cut seems likely. And next year, in November 2026, there will be the US midterm elections, with many seats in the House and Senate up for grabs. So, whenever there's an election, countries usually take strong measures to support the stock market, serving up plenty of incentives. So, will the US stock market only have a 6% return next year? From what I see right now, that's pretty unlikely. It should be higher than 6%. PIMCO thinks that because the impact of tariffs hasn't fully shown up yet, it could drag down the US stock market and other industries. Keep this in mind. What should you do? Some are bullish, some are bearish. What's the right move? It's simple. I still recommend a method we usually use when trading. When the index hits a new high, whether it's the index or an individual stock, this means it's in a bullish trend. If it doesn't hit a new high, it's not a bull market. When an index makes new highs, like gold constantly breaking new highs above $3,860, or the stock market, Dow Jones, Nasdaq, like Nvidia, TSMC, as well as the Taiwan stock market, hitting new highs, it shows the bull market is there, the bullish structure is continuing. What should you do? You might be worried, wow, if it keeps going up, I don't dare to chase it. Whether it's US or Taiwan stocks, you might not dare to chase. What should you do? But maybe you already have some positions in hand, and you're worried that if you sell now, the market might shoot up afterward and you'll miss out on those gains. You'll make less money. This is a common blind spot for every investor. When you sell, you worry about missing out if the price goes higher, but if you don't sell tonight and tomorrow the market suddenly drops 300 points, or if the Dow Jones plunges because someone said something, maybe Trump or Besant suddenly makes a comment, you're worried about that too. Suddenly, US stock market drops 800 points. Forgot to react. Afraid of losing money, but also missing out. Hold too tight, choke the bird, let go, it flies away. So, afraid of losing money, but also missing out. What to do? Simple. First, you need to. Since it's still a bull market, you need to maintain a basic stock position. At least 30 to 40% of your holdings should be in stocks. But don't go all in. Why not? Even though we're hitting new highs in a bull market, when the market reaches new highs, it often encounters what's called. The new highs will put pressure on you to not sell, but some people will want to sell, some will want to get on, and some will want to get off, right? I got off, and some will want to get off. If you make money, you will want to get off. If you do not make money, you will want to find an opportunity to get on. Of course, this is the case, so when it falls, you can of course easily buy in batches, but when it keeps hitting new highs and keeps rising, the position you have on your hand must also follow. Continuous new highs only yield partial gains. You do not need to sell everything, you still need to maintain a certain position. Why? Because the bullish structure has not changed. Everyone's worried about being the last one to sell, or being the last one left standing. So, what should you do? Remember to take profits in batches, or buy low in batches. For example, you can set a standard. For example, for the S&P 500 index, if you take profits every 100 or 200 points, you will take profits at 0.5 vols. If you drop 100 or 200 points, you will partially liquidate your position and buy 0.5 levels. This way, when there is a low, you liquidate your position and buy some more profitable stocks. If oil stocks are high, you can take some profits and put them in your pocket. If the price goes up, you can take some profits and make some arrangements. During this process, everyone will have more flexibility in their stock positions. You will also be less worried that if there is a big news one day that causes a big drop, you will not have any worries. During this process, if you don't take profits early on certain stock positions, do you get what I mean? So, taking profits in batches and building positions in batches is, in my opinion, the safer approach at this stage. And don't go short right now, don't short the market, because this isn't a bear market. Since it's not a bear market, don't randomly short. At most, what you should do is take partial profits on your long positions when prices are high, but when it pulls back, clear out your positions and buy in again at lower levels. That's a safer way to go about it. Now, about the US government, will it shut down or not? I don't think everyone needs to focus on whether it will shut down. Tomorrow is October 1st, will it shut down or not? It's not that important. Why? Because if it shuts down, it will open again. If it closes, it will reopen. Will it stay closed forever? That's impossible. Since the US government won't always be closed, it will always be open, right? Just like 7-Eleven, it's always open. That's how the US government is, but since it won't close, you don't need to worry. Even if it does shut down, it's only going to be for a short period, just a few days, 3 days, 5 days at most. That's really the longest it would be, let me tell you. The longest shutdown was in 2018, during Trump's first term. It lasted 35 days. The government shut down for 35 days due to the border wall funding issue. After 35 days, did the US stock market crash? No. Was there a collapse? No. COVID-19 happened, but it had nothing to do with the 35-day shutdown. When the government shuts down, usually not all departments close. The impact isn't huge or across the board. What does a shutdown include? It doesn't shut down border operations. National defense, security, and border protection continue. Hospitals, medical services, law enforcement, police, and the military run. Air traffic continues. Social Security and Medicare checks issued. Essential departments remain open. So what shuts down? Less important, non-essential services close. If not announced or released today, it's not a big deal. They can wait 35 days and still be released. For example, the U.S. Department of Labor's Bureau of Statistics to release non-farm payroll, but if you ask, if they don't release it, will the U.S. government or economy collapse? It's merely a supporting statistic. Its non-publication is minor. At most, they'll just delay the release. Departments like this are the ones affected. They might lay people off or just shut down temporarily, telling everyone to go home, take a break, or work from home. Whatever it is, basically hoping people will take unpaid leave and maybe come back after a few days. So whether the US government shuts down or not, there's really no need to worry. Government shutdowns and reopenings happen all the time, so don't stress about whether it will close. The important thing is, even if it shuts down, it will eventually reopen. Usually, when the government is about to run out of money and can't keep operating, Congress, both parties, will suddenly come to some agreement, reach a consensus, and then announce to everyone that maybe tomorrow the US government will be back up and running, or maybe they'll just postpone things for another month and then talk about it again. So when you see this kind of government shutdown situation in the future, just take it in stride. The second thing is whether the government will raise the debt ceiling. It's the same story every time. If the debt ceiling isn't raised, the US can't borrow more money, can't issue new debt to pay off old debt, and so on. If the debt ceiling can't be raised, the government might default, might not be able to pay its bills. Then both parties keep negotiating and everyone gets worried about the risk of a debt default. But honestly, when you see this kind of thing, just take it in stride, too. Because almost every single time, whenever they run out of money, face a possible default, or need to raise the debt ceiling, both parties keep poking at each other until, in the end, they raise it. They always loosen the restrictions, because they have no choice. If the government defaults, it would greatly impact everything from its bond ratings to America's overall credit. So, regarding the debt ceiling, it always gets raised or loosened. As for government shutdowns, the budget always gets passed. So, whether or not we get the non-farm payroll data Friday, I honestly think it doesn't really matter. If we don't get it, we just have one less data point to judge the job market. But so what if we don't see it? It's not a big deal. Even investment banks like Bank of America think the actual impact is minimal. Plus, as I mentioned, this week we have other data. Today JOLTS job openings, tomorrow ADP private payrolls, and the day after, initial jobless claims. So there are plenty of other things to look at. That's why I don't think the government shutdown is that important. Just take it in stride. Now, as for this side story about the tariff war, I wondered whether American or foreign movies would be affected because Trump said many other countries have stolen America's film production, and the way he described it, the example he gave was really vivid, but I don't think it's actually that bad. He said that foreign film production, or trying to take over the American film market, is like stealing candy from a baby. But I think, come on, America can't be that fragile. American films aren't so weak that they're like babies. and foreign countries aren't just going to snatch American films away as easily as stealing candy from a baby. I don't think it's that extreme. In reality, whether it's Hollywood in the US or other well-known places like India, doesn't India have what's called Bollywood? Many countries, including Russia, have their own film production teams. Whether it's film production, financing, or post-production visual effects, the making of a movie doesn't rely solely on American local companies for development and production. These days, movies often involve collaboration with many other countries for post-production. Some countries are strong in funding, some excel in distribution channels, and others are particularly good at post-production visual and sound effects. For example, in Hollywood, not all movie stars are Americans. Many aren't local Americans. Some might be Russian, Italian, British, French, and so on. It's not just pure Americans acting in these films. So, in this situation, when you say Trump wants to impose a 100% tariff on foreign films, I think the chances are pretty slim. It's just talk for now. None of the details have been released. If you really did impose such a tariff, American movies wouldn't even be able to get made, because more than half of them are co-produced with other countries. Would that mean those movies can't be released? If they can't be released, what happens to the theaters? The impact would be huge. So, I think there are still a lot of factors to consider moving forward. That's regarding the film industry. In addition, the Department of Commerce mentioned that for regulated companies, including their subsidiaries and sub-subsidiaries, they will continue to implement regulatory measures and so on. Just get a general idea about these things. As long as the Trump administration is in power, whether it's people like Besant, Lutnick, and so on, if they really want to impose taxes, they'll find all sorts of reasons to tax companies, countries, or even entire industries. The main goal is to get other countries to coordinate with them. So today, you see things like taxing the film industry or imposing export controls on subsidiaries of other companies. Just be aware of it. I don't think they'll actually implement these measures that quickly. More importantly, the scope of the impact, whether it's big or small, doesn't seem likely to expand for now. Let's be real, if we're talking about Hollywood movies in the US, any American film like Tom Cruise's Mission Impossible. If Mission Impossible has to go on to 8th or 9th installment, he has to keep making them, filming because of funding, production, or post-production reasons. Since it's a foreign production, post-production, or coordination, if it can't be done, it just can't be done. You just watch another movie. It doesn't have impact, it's not a big deal. Will those producers and film companies really cause a huge shock to the entire US stock market? Because, there are so many American film companies, Disney, and all sorts of others, right? I don't even know, like Green Sky, Skydance, whatever, just a lot of them like Paramount and so on. If there are some tax impacts, maybe it just increases the cost of making movies. Then, when a film is released, maybe the ticket price goes from $300 to $350 or $400. But would you really stop going to the movies just because of that? I don't think so. I don't think it would go that far, and I don't think it would have a big impact on the US as a whole either. So for this kind of information, it's enough to just take note of it and move on. What everyone should really be more concerned about, what we should really focus on, are certain data points or statements from officials that actually have a real impact on industries or the stock market. Those are the things we should pick out and discuss. But things like what we just mentioned, movie theater tariffs or export control companies, just take a look and that's it, because there are still a lot of details worth discussing further. Okay, regarding US Treasury yields, just like the terminal rate, they remain at 4.13, and the terminal rate is at 3.67. Hollywood stars don't support Trump, so it's possible for Trump as well. But Hacker just mentioned that a lot of Hollywood stars don't support Trump, but I think it's about half and half. Back during the election, did you notice that some people came out to show their support? Back then, who was it? At that time, they supported Biden, and then later it was Kamala Harris, right? Wasn't there a group of younger Hollywood actors who supported them? Some female stars, and even some very famous singers, like Katy Perry. She also supported Kamala Harris and spoke out publicly. Some Hollywood actors also came forward to say they supported Kamala Harris. But there were a few who came out and said they supported Trump. Later on, Did you see the news? It said that some Hollywood actors, not all of them, just some, why were they willing to come out and say they supported the Republican or Democratic Party? What was the reason? It was because there were political traps behind the scenes, some collaborations. To put it simply, it's kind of like some influencers in Taiwan. If you want to do sponsored content, okay, you want to do it well, then maybe politicians or political parties will work with you. They'll ask you to say something good about their party or to show your support, and in return, they'll collaborate with you, buy your ads, or pay for your exposure. This kind of thing has happened before, so now it's pretty much confirmed. It's definitely true that some Hollywood actors, singers, and so on have done this. They came out to say they supported so-and-so because they got paid, because there was money involved. So in the end, how many Hollywood stars actually support or don't support Trump? Honestly, nobody really knows. Okay, good night, Qibao Shui, good night. Yeah, Taylor Swift is really famous. He said, who knows how many fans she has worldwide? 300 million, or however many, it's a huge number. That's just incredible. This guy she got is pretty impressive too. We say they should have an engagement. Her fiancé, isn't he a football star? Football, I think it's football, American football, right? He's a star in American football, and it seems like they're engaged. They have an engagement. Okay, now, about the number of interest rate cuts, let's talk about that. It's at 1.68 times, about the same as recent situations, fluctuating around 2 rate cuts. The US dollar index remains relatively weak, dropping 0.15%. Trump wants to push for rate cuts and rate cuts. The US dollar index is relatively bearish, and as for geopolitical risks, let me add something. Today's geopolitical risk is pretty interesting. There's a new development related to Israel and Hamas. Trump just can't sit still. He's put forward a 20-point plan to end the Gaza conflict. That's 20 points, not 20 items. A 20-point list. Let me briefly read out what's in these 20 points. He says he hopes Israel and Hamas will agree to a ceasefire, and that within 72 hours after the ceasefire, all hostages held by Hamas will be released. Everyone, all Israeli hostages. In addition, Israel would release 250 Palestinian prisoners, and another 1,700 Gaza residents. It also includes things like restoring humanitarian aid and establishing a temporary governing body made up of both Palestinians and international experts. However, Hamas would not be allowed to participate in this governing body. Also, Gaza would be demilitarized, and Israel would gradually withdraw its troops in phases. No occupation, no annexation, nothing like that. Plus, a temporary international stabilization force would be deployed. But after going through all these 20-something points, there's actually no mention of a two-state solution. In other words, Trump still does not support or recognize the existence of a Palestinian state, so the two-state solution is currently not included in these 20 points. Among the countries in the United Nations, it seems that there are about, if I remember correctly, not long ago it was 157 countries that recognize Palestine, which is even more than those that recognize Taiwan. I'm not sure how many countries recognize Taiwan. Currently, 157 countries recognize Palestine as an independent, sovereign state. However, the US doesn't recognize it, so nothing can be done. Since the US is a permanent Security Council member, if the US says no, it's a no, and Palestine isn't recognized. Also, it was mentioned a new institution would be established with Trump as chairman of the Peace Committee. He said if Hamas does not accept, the United States will support Israel's actions. So overall, I think Hamas is becoming increasingly unlikely and weaker, making it harder for them to fully resist Israel. In the end, I guess Hamas will have to accept at least some of the terms. As for how many of the 20 points they'll accept, we don't know. Anyway, the geopolitical risk crisis is currently receding step by step, and the tension from geopolitical risks is continuously cooling down. Whether it's Israel and Hamas or Russia and Ukraine, in any case, the situation is cooling down, which is having an impact on the market. Honestly, none of these really impact gold much. Why has gold been rising? The increase in gold prices doesn't relate much to geopolitical risks in terms of timing. Gold has been climbing, as we mentioned yesterday, hitting new highs. This includes factors like Trump's trade war and his frequent policy changes. Also, as the US dollar index moves toward rate cuts, the dollar weakens. The more momentum toward rate cuts, the weaker the dollar gets, and the stronger gold becomes. So, Geopolitical influences and uncertainties are very high, and countries keep storing gold reserves. In addition, the Fed's clear stance on U.S. rate cuts has also contributed to gold continuously reaching new highs. This is completely different from crude oil, which continues to weaken. Crude oil dropped by 1.17%. As for economic data, there's a lot going on, and we'll keep tracking them for everyone over the next couple of days. The most important thing, as I mentioned, is Friday's non-farm payroll and unemployment rate. Whether they'll be released, we don't know yet. Anyway, we'll see tomorrow if the US government shuts down. You can even write your guess, will there be a shutdown or not? Yeah, and someone mentioned joining as a member, like a teacher said it's similar to joining a membership or something like that. Someone said there's a live stream in the afternoon, a scheduled one. Let me check what Qipao Shui said, a group. The morning teacher mentioned there's a live stream in the afternoon. Is there? More focused on individual stock analysis. If the teacher knows, I'm not sure if there's an afternoon live stream. Wow, there's a morning live stream, a morning call, a good night live stream, and another in the afternoon? Who would be speaking? Not sure if there's a live stream during US market hours. For US time, I just say good night to the group. Will there be an afternoon session focused on individual stock analysis? I don't know if there will be a teacher. I don't know if there's anything about joining as a member. But I think like Erwin said, joining Trump Investment Advisory is actually pretty effective, that's true. I really think that whenever we give talks, we always tell everyone, not just all of Taiwan. The best investment advisory in the world, the very best, who should you look at? You should look at Trump. With Trump Investment Advisory, you don't need to pay any fees, you don't need to be a member, you just have to go on his social media platform, Truth Social, and see what he posts, what he says. Everything he wants to say, tariff policies, fiscal policies, economic and monetary policies. Everything all-encompassing, every policy, all his economic negotiations with other countries. He'll post it all on his own social media platform. So, at the very first moment, as soon as he posts something, you should quickly check it out. After you see it, yeah, it has a direct impact on the market. So if he says the market is good and it's time to buy stocks, remember, the US stock market might just shoot up that very night. If he says that recently negotiations with a certain country have been very effective, then the stocks in that country might surge that very day. So, right now, whose predictions are the most accurate in the world? It's Trump. Trump's predictions are the best. Not you, not us, not anyone in this room. No one else is that good. Trump is the best at this. If he says something today, right? Then later, we can check if there are any updates for members in the afternoon. Maybe have another session in the afternoon. I don't know. This is a 24/7, all-day program. We run it 24 hours, just like my English explanation videos. The English explanations are AI-generated. My English isn't that good, so it's all converted by AI. All our English videos are done by AI, and AI is really impressive. The AI systems and software for translation are amazing. Maybe one day you'll want to translate it into Japanese, like Japanese, Ohayou gozaimasu, watashi wa gata. You could translate that into Japanese too. Who knows, maybe one day we'll have Japanese clients, or you could translate it into Cantonese for Hong Kong, you might say, Cantonese, right? Even Cantonese, you can translate it, everything can be translated. So in the future, I might not even need translators anymore. With this AI conversion, you can translate into any language you want. No problem. Okay, September 30th, today, basically, Carnival's financial report might be released. Tomorrow, we'll briefly take a look at Nike. Anyway, Carnival and Nike's results will have some impact on the market, but it's more related to retail, sales, and service industries, like cruise tourism. So, these things will have a bit of an effect on certain special industries, but for the overall US stock market, it's not a big deal. Anyway, when the financial reports come out in the next couple of days, we'll follow up with everyone, and that should be enough. As for financial news, let's take a look at this. Let's look at this. TSMC. Remember this date? October 16th, mid-October. On October 16th, TSMC will hold its third quarter earnings call. Why is that? It's important because from October 14th and 15th, major US financial stocks will announce their Q3 earnings reports. The Q3 earnings season kicks off with the financial sector. Which stocks? Goldman Sachs, Morgan Stanley, JP Morgan, Wells Fargo, all released reports from October 14th and 15th. On October 16th, pay attention to TSMC's earnings call for their 2 nanometers progress, which is crucial. Mass production for financial funds could start in Q4, so watch that. Also, note U.S. Secretary of Commerce, Gina Raimondo. She mentioned the so-called chip 50-50 rule, which means that the volume of chips produced locally in the US and the volume imported should be at a 1-to-1 ratio. But how exactly do you achieve this 1-to-1 ratio? Honestly, I think it's very difficult at the moment. As for the impact on TSMC, I believe it's not significant right now, really not significant. Why? Because it's very hard to achieve this. What does this mean? Even though TSMC has spent $16.5 billion in the US to build factories, about 5 or 6 plants in total, including a lot of different facilities, 6 wafer fabs altogether. And then there are also R&D facilities, 2 wind turbine plants, and a lot of other setups. Even with all these, the local wafer production in the US might only reach, say, 20,000 wafers per month at best. Now, in Taiwan or in Japan, Germany, or other countries, but mostly Taiwan can produce up to 50,000 wafers per month. So, let's say Taiwan produces 50,000 wafers a month. Even if all the US plants are up and running at full capacity, they might only produce 20,000 wafers a month. So, if the US produces 20,000 wafers and Taiwan produces 50,000 and exports 50,000, do you think it's likely for the US to ramp up from 20,000 to 50,000 wafers? Not likely. Why? Because 20,000 versus 50,000 is a 2.5 times difference. That's one reason: capacity. The US just can't keep up with Taiwan's high-end process capacity. It's basically impossible. The second big reason is that for the US to ramp up from 20,000 to 50,000 wafers, can the local US supply chain keep up? For example, wind turbine plants, photomask plants, equipment manufacturers, etching companies, and so on. There are a lot of things involved: gas equipment, semiconductor cleanroom packaging, cleanroom equipment, companies like ASE, and so on. When the US goes from 20,000 to 50,000 wafers, can these suppliers that originally worked with TSMC keep up in the US supply chain? Wouldn't those suppliers also need to set up factories in the US? You can't have factories in Taiwan and expect to produce 50,000 wafers in the US. It's impossible. These suppliers, maybe hundreds, would have to set up operations locally in the US. Only then could you efficiently ramp up US production from 20,000 to 50,000 wafers, a 2.5 times increase. Now, you might think if TSMC moves over, things will go faster, but then at most they can only do 20,000 wafers while Taiwan is at 50,000. To go from 20,000 to 50,000, every supplier and equipment manufacturer in the supply chain would have to cooperate perfectly. Is it possible for these companies to move over? No way. Since that's impossible, how could you reach a 1-to-1 ratio or 50-50 split? It's not going to happen. And since it's impossible, does this have a big impact on TSMC? Not. Why? Because the US can't catch up. It's mission impossible, no way to do it. So what do you do if you can't make it happen? Simple: if you can't do it, then for the US plant, it'll just produce 20,000 wafers, while Taiwan will still be at 50,000. TSMC could say, if you want a 1-to-1 ratio and impose tariffs, the US plant produces 20,000 wafers. I can only export a certain number of wafers to you. If American companies want my chips, since you want a 1-to-1 ratio, I'll export 20,000 wafers. That way, you won't pay tariffs. You produce 20,000 wafers locally. You just import 20,000 wafers. I'll sell the remaining 30,000 chips to other countries and other companies. Look, Nvidia, Intel, Apple, and other major domestic companies can't handle it. They definitely can't handle it. Why? Because they still desperately need TSMC's advanced processes. These 2 nanometer, 3 nanometer, and even future 1.7 nanometer and 1.5 nanometer chips are crucial for the development of AI. So, if Lutnick tells you that my US factory only has a production capacity of 20,000 chips and I can only import 20,000 chips, that's absolutely impossible. In fact, US companies demand more than 20,000 chips. And these suppliers can't all cooperate and take the long-term approach, so it's very difficult. So, let's just talk about it. As for what else the US Secretary of Commerce or even Trump will use, how can we strategically deploy the semiconductor industry rather than relying entirely on foreign wafers from companies like Samsung and TSMC? Is this a matter of domestic development or taxation? I don't know. Many people suggest that Intel should be nurtured and replaced by TSMC, but that's impossible because its production capacity and technology are not up to par. Apple and Nvidia want to use these chips, but they can't use Intel chips because they can't make them. You can't use 2nm or 3nm TSMC chips for iPhone 17 or Nvidia GB300. It's impossible to use Intel chips. What happens if they are made? They will explode and won't run. What if they can't run? If they can't run, you can't sell them. iPhone 17 will become iPhone 7. GP300 will become GP3. AI won't run. It's impossible to use Intel chips unless they are low-end or high-end. High-end products must use TSMC low-end. This is the current reality. I think TSMC's current 55-point performance has little impact on its market. Yesterday, it dipped slightly by about 0.05. It's a relatively bullish trend. The fundamentals are strong. As long as the 20-day moving average hasn't fallen below it, there's no need to worry. Jensen Huang continued to sell stocks from September 25th to 29th, cashing out $40 million. He's been selling stocks for 4 consecutive months. He's sold 4 times in a row, and the transaction price has been between $174 and $184. He's been selling stocks. Even when new highs are reached, he's still selling. Even when new highs aren't reached, he's still selling. June, July, August, and September. In June, $142. In July, $160. In August, $180. And in September, $180 and $185. He's been selling for 4 months, June, July, August, and September. Why learn from Huang Renxuan? He's the important CEO. He owns a lot of shares. It's not just 3 trillion, it might be 4 trillion now. 4 trillion new Taiwan dollars. Because the value of his holdings, the market value up to now, is extremely high, incredibly strong. With so many shares, even he sells a little bit at a time whenever the price is high, selling off bit by bit. He's selling 6 million shares this year, having sold them one after another. He sold 6 million shares last September, filing a sales report in May. He sold every month in June, July, August, and September. He'll sell in October, November, and December, continuing to sell. He might sell all 6 million shares this year. So, if you want to learn from Jensen Huang, you should see monthly increases. Industry fundamentals are good, and the AI trend hasn't changed. Everything is going well. CSP companies constantly increase capital expenditures. Whether they're dreaming about the present or thinking about the future bubble, whatever, until the bubble bursts, everyone should keep dreaming. Just keep dreaming, keep spending, and keep buying chips. That's how the stock price will rise. Revenue will continue to rise straight up, and it will continue to rise until this dream is broken. Everyone will continue to make money with this wave. But while making money, we must also learn from Jensen Huang. He sells a little more as the price rises, sells a little more as the price rises, sells a little more as the price rises. So you understand. Did he buy when the price fell? No, he didn't declare it. He didn't buy when the price fell. No, because he holds too many stocks, so the more it rises, the more he sells. The more it rises, the slower it rises. That's roughly the concept. So, after learning from Jensen Huang, this stock is currently entangled between the 20 and 50 moving averages. No need to worry too much before it falls below. But I still want to remind everyone that we must have a high-level thinking attitude and strategy. Huang is constantly selling stocks. Do you think we are smarter than Huang? Is our net worth higher than Huang? If not, if even Jensen Huang is selling his shares, I really can't find a reason not to sell. Anyway, he's selling gradually, so we just follow along and sell gradually too. Just keep selling as the price goes up, sell a little slower each time, and take profits in batches. Nothing wrong with taking profits in batches. Just don't short the stock. Take profits in batches and put the money in your pocket. Only when it's in your pocket does it truly belong to you. If you haven't put it in your pocket, it's just fake wealth on paper. If it goes up and then comes back down, wasn't all your effort for nothing? You're not playing Monopoly here. My approach is the same. The higher it goes, the more I sell bit by bit. If it drops, I buy a little. One day, when the trend isn't right, When both the 20-day and 50-day moving averages turn downward, I sell everything. That's how I do it, so you can use this as a reference. As for whether this method is good or not, it really depends on your personal trading habits. Lastly, to add a bit about the stock, well, forgive me, but KGG said that America can't make good movies anymore, that they're all dominated by black people, and that there are a lot of bad movies. I don't really know how bad American movies are. Honestly, when I watch Hollywood films, there are still quite a lot of them, or maybe a lot of Hollywood movies are already co-produced with other countries. I'm not sure. Anyway, there are just so many movies. Ever since I got in... Oh, let me tell you, once I got in... Ever since the COVID-19 pandemic started, I've pretty much stopped going to the movie theater, and I still haven't gone back. I've just gotten used to not watching movies in theaters, so it's probably been 3 or 4 years since I last went. But honestly, there have been a lot of good movies in these past 3 or 4 years, and I've missed out on so many, like Tom Cruise's Mission Impossible 8 and 9. I didn't see those either. Basically, I missed a lot of famous movies, which is a shame. Sometimes I just can't find time. Sometimes I just can't find the time, and when I get busy, like I have to do live streams, watch the Taiwan stock market during the day, and then the US stock market at night. When I'm not live streaming, I'm at branch offices giving talks, and when I am live streaming, well, I'm doing the live stream. So basically, I really don't have much time to watch movies. Speaking of talks, let me mention something. Next week, today is September 30th, right? Next week, on October 8th, which is right after the Mid-Autumn Festival, I won't have to do a live stream, and I'll be going to the Yonghe branch office to give a talk. Yonghe branch office, Yonghe. If you want to hear more about the market, I'll be at the Yonghe branch discussing the Taiwan stock market. If you're interested in the Taiwan stock market or want to know more about the general manager and would like to interact in person, I'll give a talk on October 8th in the afternoon at the Yonghe branch. If you're interested, contact our branch's person to inquire. When I'm not live streaming, I'm visiting branch offices. That's the general idea. Sometimes I go to Taichung, sometimes to Kaohsiung, just running around everywhere. Now, looking at the US stock market, some companies are up in pre-market trading. Freeport-McMoRan is up 2.16% in pre-market. FTD Global and Nationwide Information are also up 1.47%. Other companies like Western Digital, Raytheon Technologies, and Broadcom are up about 0.7% to 0.8%. Today, some of the companies rising in the US pre-market include a few defense stocks like Lockheed Martin and Raytheon Technologies, as well as some power generation companies such as Constellation Energy and so on. There are quite a few. On the other hand, let me also update you on some of the companies that are down, like Intel. In the US pre-market, Intel dropped 2.12%. This isn't bearish sentiment, but a pullback after last week's 20% surge. So yesterday and today, the US pre-market saw a slight decline. Coinbase is down 1.69% and Tesla 1.15% in pre-market. These are normal corrections after previous gains. These are minor pullbacks after big gains. Impact isn't significant. The Dow Jones Index still holds strong, up 0.15% yesterday, above monthly and quarterly moving averages. The Philadelphia Semiconductor Index also above monthly and quarterly moving averages, rising 0.16%. Sectors most robust and complete is the Magnificent 7 Index. The Magnificent 7, 8, or 9 performed similarly in the US market yesterday, with a small gain of 0.37%, still above monthly and quarterly moving averages. If you're unsure what to buy, look at the Magnificent 7 or related index funds. These drive US stock market gains. The US market. The market is still in a bullish structure. In a bull market, after significant gains, minor short-term pullbacks or corrections are inevitable, whether due to technical factors, news, or other reasons. After a big rally and every new high, it's natural for the market to pull back. Sometimes these small corrections might be 2%, 5%, or even up to 10%. If you can avoid these pullbacks, that's best. But if you can't, remember, the higher the market goes, as long as it keeps hitting new highs, you should slow down. If it drops to the moving average or base moving average, that's when you can consider lightly buying on the dip. Buying low and selling high, going back and forth, is honestly the safer approach at this stage. Remember that saying, money in your pocket is the only real profit. Otherwise, it's all just on paper. Lastly, Tonight's group discussion will cover related topics. And as always, in the US, we provide everyone with first-hand information before the market opens. When class is over, remember to like, subscribe, and share. Finally, I wish everyone smooth trading, and we'll see you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.